Hey guys, welcome back to another Monday market update. Thank you for coming to my channel and watching this video, and for all of you that subscribe and watch me every week, I appreciate you. If you're new, make sure you subscribe and hit the like button. I'm Caitlin McKegg. I am a real estate broker here in Phoenix, Arizona, and every Monday I give a market update video on what's going on in the Phoenix real estate market. So if that's something you're interested in, make sure you subscribe and follow me for more. So you guys, this week I left the board from last week up here just so that I could remember where the CMI was last week and not have to look it up before I did this Monday market update. But to my surprise, we have a very big update, and I'm really glad that I left this 404 up there because I want everyone to see where we were at and where we are today. And so starting with that, and I have my notes here, I'm gonna cheat as we go along, but why don't we just start with the CMI so that I can show you where we are today. Hold on. Let's drum roll here, please. Like I said, I'm still getting the hang of all of this. There's a lot of moving pieces here with a whiteboard and the data and talking. It's becoming very challenging. All right, so here's where we're sitting today. You're going to lose your mind. 425.6. I couldn't believe that. So if you're new here, I'll tell you about the CMI. If you're not new, you can skip this part. So the CMI is the Cromford Market Index. I follow a subscription from the Cromford Report, or I have a subscription to the Cromford Report, and they will study MLS data on a daily basis and analyze it and give us all of this great data to share with our clients. And one of the things that they have developed over the last 22 years is the CMI, which is the Cromford Market Index, and it helps us understand supply and demand factors in the market and also helps us understand which direction prices are going. If we are over the number of 110, we're in a seller's market, and if we're below the number of 90, we're in a buyer's market. And yeah, we're a little bit higher than 110, I would say. So last week we were at 404. We've jumped totally to 425.6 this week, which is just crazy. And this is mainly because our supply is dropping. It is not increasing, it is dropping. Demand hasn't changed all that much. It's been kind of hanging out around the same point. Let's see, we were at 121.5. I think we're at 122 this week. Somewhere in there, maybe 120. Regardless, not much of a change. And then our supply has gone down. I think we're at 28 or 29 about this week. So this here is the problem. Our supply continues to drop, our demand isn't changing, and that's increasing the market index, showing us that we're further and further into a seller's market. Our supply went down 4.3 points on the market index. So when we look at supply factor there, 4.3 points in the last 30 days, which is pretty significant. And that's why, again, the market index continues to go up. That CMI had kind of been hanging around the same range when we were in the 300s for quite a while and moving slightly and kind of creeping up. But in the last 30 days, the CMI moved up 54 points. We went up 54 points since in the last 30 days, so over the last month, which is why we're so high on the CMI today. So anyway, the reason I'm emphasizing this is because, like I said, it helps us understand where prices are headed. And as long as the CMI is continuing to increase, we know that prices are not coming down because we're in a seller's market where supply is much, much less than the amount of demand that we have. So that's where we stand with the CMI this week. I'm glad I didn't erase everything because I was pretty shocked to see where we're at. But now I can erase this from last week because I have a few other things I want to share. So we did get the amount of, or the numbers associated with the intended use of properties from last year. And so wanted to share where that comes in at. This is based on the fourth quarter. And so we had 4% of properties purchased last quarter were for iBuyers. And then we also had 14% were second homes, 19% were investors, which leaves us at 63% were our owner-occupied. So this is, owner-occupied is when people are buying for their primary home, investors for rentals, for flips, whatever they're doing with the property, 14% second home, so people buying from out of state, and 4% iBuyers. This number of owner occupants, that is normally closer to 75%. So that's low, and likely because these investors and iBuyers and second homes even are taking up more of our share of homes in the market. So I thought that breakdown was interesting. I always get questions about how many buyers are investors in our market, and so that's the latest data that I have on that. So you guys, that's all I have for this week. I just wanted to give you an update on the CMI and then this breakdown here, but bottom line, Cromford report is saying we're continuing in the direction of a seller's market, and unfortunately, we don't see much hope for buyers anytime soon. The supply level isn't getting any better as of now. I keep saying I think by the end of January we're going to see more homes on the market, but I don't know. I don't know what to tell you. Maybe we won't. We'll see what happens. But unless that supply starts to go up, we are not in a position where we're going to be going towards a balanced market. We're only continuing further on a seller's market. So thank you for tuning in this week. I appreciate it. If you have any questions or if you want to chat with me, check the description below. My contact information is there and a link to set up a time to speak with me on the phone. So feel free to check that out. Everybody have a great week, and I'll be back on Friday with a new video.